Hey guys, I think we're ready to get started here.
Yeah, let's do it.
Are you here, brother?
Yeah, I'm here.
Hell yeah. So Akin, we're just gonna go. I think it's good to go around and kind of introduce you to everyone that's currently here. My name is Mewtwo. I'm the founder of the Base Space. We've been doing this space now for I don't know how long are we doing the space, Super High? We're probably doing space
Probably like a couple months, 2 months, maybe.
Nah, we've been doing it. Yeah, maybe. I think more, maybe like 4 months.
I think time flies when you're having fun.
It just kind of started out as like a fun thing with friends, and now we've been able to really expand out and provide like an educational platform, and also a platform for networking for just everyone in the crypto Twitter space. So we've had everyone from Bancor to WooTrade to Linkpool was recently on here, which was super cool. If you're familiar with Chainlink God, he's a big supporter of the space as well. So we're really excited to have you on. Super High, you can go next. Maybe just give like a quick intro.
Yeah, so I'm Super High or Link T, whatever one you want to call me, doesn't matter. I'm the community manager at Base Space, so basically what I focus on is reaching out to get projects on like Aiken and other projects just like Bancor, just kind of keep the spirits up in the community. Shit posting is part of that, just posting memes and getting a collective energy going, and basically just informing everybody that at the end of the day, we need to use this money for good and these investments for good and not for evil. And so that's kind of my underlying role, is just keeping the positive vibes, reaching out to protocols to bring on, and kind of doing more on the back end rather than the speaking.
Chase, if you want to go next.
Yeah. Hey, I can Chase here. Recent team member joined the Base Space, really just kind of out there just being a part of the community and kind of like seeing the direction of where this is going. Helping build out a network of people coming together to kind of like learn and grow this industry was something that kind of like interests me. So that's kind of like what gravitated me towards working and helping build this project. So a lot of my stuff is kind of like behind the scenes, just a team member helping bring on different projects such as yourself, and really kind of just facilitating our like just kind of kickbacks that we have on the regular spaces. So just being a regular speaker and just kind of being around the community. That's about it for me.
And last but not least, Connor, you want to intro?
Yeah, what's up, everybody? I'm more or less someone who just stumbled upon Base Space as I was following someone who was speaking one night, and then I really loved what the team was doing, reached out, offer help. Now I kind of like record and do like stuff for the YouTube channel on the side. But yeah, I don't know, just kind of enjoying helping the community and mainly just, I don't know, benefiting from being able to join these every night and just learning like the rest of you guys. But yeah, I don't know, I kind of work on the production community side. If anyone has interest in that, let me know.
Hell yeah. Yeah, we're all really excited to have you on, Akin. First question we have for you is, how'd you get into crypto?
Yeah, so I originally got into crypto like I think many people, when I first bought Bitcoin and bought Ethereum. Time is, I don't quite remember. This is probably like 6-7 years ago initially when I first bought Bitcoin. And as I started kind of just thinking a little bit more into like, okay, what are blockchains and what do these things do? I was really interested in, blockchains as mediums of exchange. So the ability to move value in a permissionless way was very intriguing, because I'd spent quite a bit of my career, or a better part of the last, let's say 12 years, working in fintech in West Africa. And if anyone knows anything about sub-Saharan Africa, it's the most expensive corridor in the world to move money into. And it's actually even more expensive to move money between countries. And there's some structural reasons for that, some regulatory reasons for that. And so that really appealed to me as a potential new financial rail that gives, people more independence in how they basically store their money and move their money, and being able to move value outside of, the current financial system was really appealing, because growing up in Nigeria, my dad was a banker for all his career, and I just thought, it's crazy how difficult it is for Africans to transact between themselves and actually globally. And so that was something that just really was a natural point for me to gravitate towards, and I started doing a lot of research around, blockchains as payment platforms. Advised a few companies that are trying to build remittance platforms on blockchains, and so that was my initial foray into the space. Eventually, that kind of led me down, deeper into the rabbit hole. I got very interested in governance and how these protocols, if they're going to scale over time, how do you govern them, right? And how do you, particularly protocols that are not, just pure money like Bitcoin, but everything else, how do you scale them? How do you manage them? How do they reach their full potential? And coming from a background in economics, that also just appealed to me. What's the difference between a firm and a blockchain network? And what can you do in blockchain networks that you can't do in traditional structures? And so what are the ramifications of that? And how do you actually build new governance systems that are scalable, right, as these networks scale? So that kind of got me down another path. And just spent a lot of time in the governance side of things. I joined Decred, which was, I'd say maybe the first or second, depending on who you ask, like governance protocol that was sort of built off of a Bitcoin architecture, but with a view to have, governance as a central theme, right? With the view that you want to build other things, not just a store of value, but these networks could do other things and can have multiple applications built on top of them. And so that led me to Decred, spent a year and a half there, which was up until last May. And, took some time off, decided to got lucky, I guess, in terms of the timing. DeFi summer was sort of starting off. So all the projects I'd neglected from 2018 that were beginning to launch mainnets, there's just a lot of opportunity now to kind of go back and, jump into the fray. And I think the timing was lucky, got back into some of my favorite projects in the space. And that eventually led me to Bondbridge in the fall of last year.
That's incredible, man. I'm super curious. Like you touched earlier about the Africa, like the environment in Africa. Can you talk a little bit more about like the difficulties with transacting down there, even just between like your peers?
Sure. So if you think about like how the current financial system in the world is, right? It's backed by the dollar, and if you think about the position Africa kind of has in the global financial market, broadly speaking, Africa is used for extraction, right? So Africa has natural resources. These natural resources are priced primarily in US dollars. And most infrastructure you see across Africa, sub-Saharan Africa, even today, are really built to optimize for extraction, right? So whether it's oil and gas out of Nigeria, whether it's cobalt, copper out of Congo, right? You generally see these economies as dependent on exports of natural resources, right? And those markets are determined ultimately by the US dollar, which is how they're priced globally, right? So the dominated financial system has a lot of influence, not only in how these assets are valued, but what countries get paid, right? So that's the first thing. And so by default, these financial systems are designed to cater primarily to corporations and entities that facilitate the extraction of that value, which is why if you look at banking in sub-Saharan Africa today, it's still very much, people use the term that Africans are underbanked, right? Most sub-Saharan Africans, 80% of sub-Saharan Africa does not have a bank account, right? And some of that is because the system wasn't really designed to cater to that use case of building out these economies. It was designed to cater to extracting value out of these countries. So fundamentally, right, the rule set that determine how the financial system in Africa works is derived externally, right, from interests that have, right, a view that they want to sort of get value for as little as possible, and they're not necessarily interested in building infrastructure, right, or building strong civil institutions, right? So if you look at even some of the functions of global financial institutions like the IMF or the World Bank, look at the projects they facilitate, look at the policies they've pushed through over the last 30, 40 years. Every country in sub-Saharan Africa that's ever taken a loan from the International Monetary Fund is worse off today than it was 30 years ago financially. And, you could argue that, okay, there's some inherent problems in African countries, but on the other side, if you're trying something and it doesn't work, then you try something else. And if you look at fundamentally how most Western countries developed, they developed under strong constitutional and civil institutions, right? So if I'm American and I want to go build democracy in Africa, for example, then follow the playbook America followed. Go build strong civil institutions. But that's not been that's not happened. So there's a different game being played. So that fundamentally is, I think, maybe a long story, but it's a little bit of a backdrop of then how everything else has derived from that. And so if the intent is to extract value from countries, then you're not really interested in building intra-Africa trade. You're not interested in these economies basically funding each other, which is what cross-border trade does, right? One country funds another, you buy things from someone else, right? Most of the goods and services that are actually non-raw materials that are traded in Africa are imported, right? So you'll create this dependency where many of these countries now have to import things from the West in exchange for their raw materials. And anyone who understands business realizes that raw materials are not where you get most of the value. It's in all the processing that gets you to a finished product. That's where you get the higher margin value. So it's a little bit of a rigged game. And, growing up in Nigeria under these circumstances and being able to see, like, in some ways, the financial system firsthand, I suppose that kind of laid some of the groundwork unconsciously for, I think, why I gravitated very quickly into crypto, because it really looked to me like, well, that's the ultimate solution, right? Because if you can rely on peer-to-peer networks, if you can rely on a more fair and accessible marketplace, then that's the basis through which a fair financial system can be built in the first place. So if you think about things from first principles, like fix the fundamentals and then build from there. And I think that's just how. I guess that's my short answer to that.
That's extremely insightful. Thank you for sharing that. Extrapolating that out a little bit, I think the passion obviously brought you to where you are with Barnbridge, but can you also kind of discuss how, from a professional perspective, how that kind of played out, where you actually were able to make that first step into the blockchain industry?
Yeah, so most of my career I spent in management consulting and structured finance. So I think I spent a total of 5 years between Fannie Mae and Freddie Mac doing structured finance on mortgage-backed securities, building structured products. And then, the bigger part of my career I spent, doing management consulting primarily to federal reg agencies in the financial side of things, right? So, FDIC, Treasury, the IRS, right? So a lot of those financial reg agencies. I did a little bit of a stint at Homeland Security. But anyway, I got into consulting originally because I wanted to know how to run businesses, right? What does it take to actually run a business? What are the various moving parts? Because my long-term view was always I want to do something on my own at some point. So along the way, I actually got the chance to invest in a mobile payments company in Sierra Leone called Splash Mobile Money. This was about 12 years ago. That's run by a friend of mine. And that kind of got me into fintech in West Africa, right? So I saw that as almost kind of like a slow way to sort of, not quit my day job, but get involved in an area that I thought was interesting. And so I got a seat at the board of Splash, and essentially vicariously ran the company through this buddy of mine who relocated there, and we tried to build this mobile payments company together. And over time, that just sort of slowly evolved into advising other fintech companies, right? So if you look at Africa, I'd say 7 years ago, or maybe a little bit longer. But mobile payments took off in Kenya with M-Pesa, and then effectively, most people make payments in Kenya with their mobile phones. So it was widely successful for a number of reasons that I don't think we have time to go into, but it was widely successful, and that then sort of proliferated across Africa, where other countries are looking for ways to implement this mobile money, mobile-based system, right? The prerequisite for that obviously was having mobile telecom coming into Africa and being a big revolution, right? Because when I was growing up in Nigeria, like having a phone was a luxury, right? Through the late '80s, like it was, I think there were maybe 500,000 phone lines for 150 million people, and so when cell phones came, even though they're really expensive, right? Over time, competition comes in, prices go down, right? So it became this basically huge like value accretive add to economies because now people could communicate and save time, save costs of travel, all sorts of things. And on the back of that, the natural thing was then, okay, how do we use these platforms to exchange value and make money? So I'm kind of in the middle of this as this thing was sort of taking off because Splash was actually the first um, the first mobile payments company that was what we call like MNO agnostic. So it sat on all the telcos in the country. So it was all interoperable. So it didn't matter what cell phone you had, you could sit on this interoperable payment system. And in many other countries, it didn't quite evolve that way. It was sort of like, each of the mobile payment players was doing their own thing. And so to a large extent, like it gave us the ability to kind of innovate in a little bit of a different way where the telcos did not see Splash as a threat because it was independent, and they saw it more as like, all right, here's a way we can extend and create a new a new source of income. And so Splash was able to develop a little bit differently than I think most mobile payment companies and solve other kinds of problems. And I think on the back of that and some of the innovation that came through that, there's a lot of attention from just others who were building fintechs and other things. And being from Nigeria, like, it was easy to kind of just sort of organically build a following. And so that's kind of how I got into fintech. And then, which kind of led me to crypto, because one of the things we're seeing at Splash in Sierra Leone was, I mean, people kind of understand how remittances work for diaspora groups. Like you have the large players, like, um, like the big, large, payment companies historically. But you have a lot of many, many small players that kind of follow diasporas, right? So, for example, in the U.S., because remittances are basically managed on a state-by-state level, you have to get a license in every state. There'll be a remittance company in Minnesota, for example, for like the Ethiopians there or the Somalis there, because there are large communities there, and they might have a license only in Minnesota, right? And they're independent and they're looking for distribution. Okay, how do I connect with distribution on the ground to get money? I can get money across the world into the country, but how do I get local distribution? And the same thing happened with us in Sierra Leone, where as we started building out the network, you now had all these independent players from out the world saying, all right, you guys have distribution, how do we plug in? And we started learning some of the friction and challenges that these guys were facing, having to sort of go through this very onerous system to be able to actually, set up these companies. And we just thought it made no sense and it was extremely broken. And that kind of started getting me curious about, wait, there's this new blockchain thing. Like I bought Bitcoin and ETH, but ETH is supposed to do a lot more things. Like I need to kind of dig deeper and figure out, like, is there a new financial system we can build on the back of that? Yeah, so I mean, I'll stop there, but that's kind of how that kind of story started.
That's extremely fascinating. So, kind of going off that, we have a lot of people in our community who are actively seeking jobs in the industry, or they're actually preparing. Like in the future, they envision themselves working in the industry. Some are focusing on the development side. I'm sure some will kind of be on the business side of things. I know at Barnbridge, you're on the operations team, and you kind of specifically focus on strategy and partnerships. Could you just kind of like touch on like what it looks like day to day in your actually role in this industry?
Yeah. So the one thing, so just so before I go too far, I want to preface this too. So as of yesterday, I was on the operations team. I'm no longer in the operations team at Barnbridge. I've gone back into the DAO, so to speak, which is where I came from. And so I'm going to be focused going forward on actually building out and supporting the build out of structures within the DAO as opposed to being on the core team. I just want to kind of put that out there. But yes, that question is still very relevant because as of yesterday, I was still in that role, in that capacity. And day to day, it's sort of like the best way to kind of think about it is it's like you said, you're kind of trying to brace two worlds, right? So part of the thesis around Barnbridge is that there are all these traditional pools of capital that are either looking to come into the system or don't know yet that they're going to be using DeFi down the road, right? And the appeal is to build platforms and protocols and products that user would want to subscribe to, while at the same time also building products that DeFi natives also value and can use. And so when you think about what it takes to do that, at least in my role, it's sort of like being a utility player where you have to be able to really understand DeFi quite deeply, right? And understand why, for example, right, subscribing to Chainlink price feeds and Chainlink Oracle feeds makes more sense than spinning up your own Oracle. Like you need to understand that really intimately and why you're going to pay, in some cases, right, a premium to access those feeds, right, versus just doing something on your own, right? You need to understand, all the antecedents in DeFi, right? Aave, Compound, Uniswap, like all the protocols that have had product market fit, that have had some success, and how you can leverage them in your strategy, right? So that you don't have to reinvent the wheel, and perhaps you can build on top of them, which now requires you to be able to engage these platforms in a level at which you're credible, right? You understand the same language. You can kind of sell them on why, right? What's in it for them, right? So why provide resources to integrate with Barnbridge? What are you guys doing that is interesting, attractive, that adds value to us as a network relative to the dozens of other protocols that are knocking down our doors and we're trying to prioritize against, right? So you have to be able to do that intimately, right? So on that side of my role, right, I spend most of my time in Discord channels and Telegram groups, right? Pretty much like going, my office space is going through dozens of those groups within a day and interacting with different groups at different times, right? And trying to coordinate across, this whole space that is actually moving really, really fast at the same time. So you have to keep up with how fast it's moving. You have to keep up with innovation that's happening because perhaps your next partner is the protocol that launched like 4 weeks ago and has done something really, really interesting, which you think is the ideal partner relative to the partner you were thinking about 3 weeks ago that was ideal, right? So keeping abreast of that can be complicated, but I think over time it narrows down because it's a very, very noisy space. And over time you begin to learn what the signals are for like legitimate projects, like what your viewpoint on the space is, what kinds of partners fit and align with your vision. Right? I don't think we spend enough time talking about vision and alignment around that. It's not just about the tech, but right, if you're going to think about long-term partnerships, you want to partner with protocols that are seeing the future the way you are, and you have that philosophical alignment. Because I think that's really important. And then the other side of my job is then now on the traditional side where, which is, I suppose, a little bit more natural based on my career, where you're interfacing with financial institutions, you're talking to, all these groups that you think should understand, I guess the low-hanging fruit of folks who are already in the space, right, who you need to convince as to why they should be using and putting capital into like a senior tranche on smart yield on Barnbridge relative to just sitting on Compound and Aave like they've done, right, for the last year. So what's the value add for me, right? So selling those people on that and then moving further up and actually now engaging others who are not even here yet because, there's a long sales cycle, right? And part of your job is to build credibility with these groups, right? a lot of it is educating them more than anything else as to what's really happening. And if they can see you as a credible partner, like, many times I've had calls with entities where it's about Bridge, but it really evolves into this just broader conversation on DeFi because they have all these questions and want to understand the space. And some people might think about that as a waste of time, but it isn't, because what you're doing is building a trusted relationship with someone who potentially, when they're ready, might be deploying large sums of capital into your protocol. And because they see you as that credible resource, you built a relationship. And I think, that one point is very, very important, because if people really understand how traditional finance has worked, like what investment banking is, right? It's a relationship-based business first, right? There are people that leave Wall Street banks to other banks, and all their clients go with them because their clients will tell you, I have a banker, not a bank, right? So those trust and relationships are very, very important. And oftentimes they take quite a bit of time to develop, especially when you're talking crypto and something that they don't really fully understand, right? So that's the other side of things where, you have to sort of be able to straddle both worlds and be credible to both, right? And I think that's the space I've played in. I think I'm relatively comfortable there, but I think it's something that any protocols that are trying to think about building long term to attract traditional capital, like they'll need to be able to interact with that space in a credible way. And yeah.
Yeah, that's awesome. I think that's actually like a really good segue. Would you mind like diving in for the audience, like going into the Bridge protocol and the purpose of the bond token for those who may be new to crypto space or possibly even like hearing about Bridge for the first time tonight?
Yeah, so Bridge is at heart a governance protocol, right? So the bond token is a governance token, and I'll kind of go into that. But fundamentally, what Bridge, the tagline or the top line is, we're a tokenized risk protocol. And what that really means is that when you have the ability to sort of program money, then you also have the ability to decouple all the variables that go into an asset, right? So you look at a financial asset, right? There's a principal potentially lodged somewhere, right? There's a borrower, there's money moving back and forth in terms of interest payments. Someone's getting paid, someone is receiving, right? So and then there are certain things that affect the value of that asset, right? So in the traditional space, interest rates matter, right? The inflation rate matters. There are all sorts of like figures, right? How fast is the economy growing? There are all sorts of exogenous things, like external things that affect the value of an asset at any point in time. And what you can do in DeFi is you can decouple all those variables and price them individually, right? So there are many things you can do where you can say, all right, if, so for example, with Smart Yield, which is our first product, right? Smart Yield basically is built on top of, primitives that already exist, right? So Compound and Aave, or any yield asset or yield pool in DeFi that gives you a variable rate, like Smart Yield can build on top of it and split that variable rate into two pots, right? A senior side, which is a fixed rate, and a junior side, which is almost like a leveraged exposure to that underlying variable rate. And the way you do that is just math, right? You basically transfer the risk. You design the pool and say, I'm transferring risk from the seniors to the juniors, right? And the juniors basically who sit on one side of the pool like a seesaw are basically like an insurance pool, right? They're getting a return, but they're ensuring that whatever rates the seniors have locked in at any given point in time, they will get paid, right? So we basically have the ability to now take what is a variable rate yielding asset and change the dynamics of how that asset actually looks, right? So we've decoupled this idea that something's a variable rate and we've basically transformed it into something else. And you can do that for many things, right? You can do that for volatility. You can do that for price exposure, right? So you can say, look, you can hold Bitcoin or Ethereum, or I want a 50% exposure to Bitcoin. So if Bitcoin goes up 50%, I can have an exposure. If Bitcoin goes up, I only can have a 50% exposure to it going up or down, right? You can program these things in algorithmic ways and it's essentially just changed the nature of how these assets actually work. So that's kind of like a long definition, but inherently, like Bondbridge is a protocol where we can basically design new kinds of financial assets programmatically that are very, very difficult to like essentially build in traditional markets. And because we could do that, you can essentially, like, you can essentially create products that are more exacting. What I mean by that is there are lots of people who are sitting in Aave or compound pools today earning a variable yield that would much rather like earn a fixed yield, right? But well, if variables all I can have, well, I'll take it. And the reason why lots of people want fixed yields is you can plan better, right? I can get a fixed yield. I can create a structured product. I can change the risk dynamics. There are many things you can do when you just fix one variable, right? Okay, it's a fixed yield here. I know what it is. I can now plan and project out against that asset, right? But if I told them, look, here's an asset now where I can create a fixed yield position for you, which is exactly what you want, then that party, all things being equal, should be willing to pay a premium for that because that's exactly what they want, right? As opposed to, well, good enough variable rate. So the idea now becomes that you can actually programmatically now create structured products effectively that the customer really wants, but it's a structured product that can also have a very liquid market where you can sell it into, which is, in traditional finance markets, it's sort of like a continuum where you don't get it both ways, right? The more esoteric a financial product is, the harder it is to create a liquid market for it because it's non-fungible, right? It's something some guy wanted to build, and perhaps like there are 5 people in the world that would ever want to buy it, right? In DeFi, because of the nature of how markets are, the way information is on chain, you can build these structured products and still create liquid markets for them because it's easier to get like discovery of these assets and products because they're on chain. And just because of that, like a lot of the factors that go into thinking about cost, that go into thinking about, many things are just different. And so things that would be, prohibitively expensive in the traditional finance market to do are actually possible in DeFi for a number of reasons. And so that's basically what Bondbridge is trying to do. Think about like how do we create products that we know and think these guys want to use, but it's extremely expensive for them to do currently, or they can't even do it at all. And if you can solve those problems and create new financial innovation around that, then a lot of interesting things can happen. And that's basically at the heart of what we're trying to do at Bondbridge.
Yeah, that's super interesting, sticking on the smart yield product. So to summarize, if I'm understanding correctly, you have these senior tokens who basically get that guaranteed fixed return. They're not the risky crowd. They're risk averse, and they want a guaranteed income. And those are NFTs. Is that right?
Yes, they're NFTs because they're non-fungible in that the value you can lock into at any given point in time, and also the principal you're bringing in is always going to be unique. So they're NFTs, they're non-fungible. Yeah.
And on the flip side, you have your junior token holders who are maybe a little bit more willing to have a little bit more risk in the game to chase that higher percent yield.
Yes.
And those are fungible to where that opens up secondary markets.
Yeah, so the juniors are ERC20s, pretty much standard because it's basically like a shared pool where a junior has a fractional exposure to that pool. So they're ERC20s, and yeah, so inherently, right, they're a little more liquid. You can create. It's easier to make secondary markets for them because, right, up until Uni version 3, like everything is like ERC20s, right? These markets are fairly well developed, so you can put them in the AMMs, right? It's a little bit easier to kind of build markets against that, and a little bit more of a challenge to create markets for the NFTs. It's possible, but it's technically possible. It'll be a harder lift to get there, just because no one's really doing it currently today.
Yeah, and so what does that implementation look like in terms of if you integrate into Aave? Will it be noticeable on the user facing side? Will they just kind of have an option when they're adding liquidity, and your product will just be naturally integrated, or is it more of a back end integration, and you'll have separate pools?
Yeah, so you'll access those products on Bondbridge DApp. right? So if you log into app.barmbridge.com, you'll see a compound pool, an Aave pool, and a cream pool. Aave and cream got recently launched, and then in the next few weeks you'll see an Aave Matic pool, right? So you'll just be able to click on these pools. You'll be able to see. Like currently, they're all stable coins, right? So you see all the stable coins you can get access to: USDC, DAI, right? Depending, I think GUSD is going to be launched on Aave, right? So the idea is to have a diversity of stable coins and stable coin markets where you can kind of, if you have your favorite stable coin, you should be able to find over the long term a market on Barmbridge where you can access it, right? And so Barmbridge basically is integrated onto Aave at a smart contract level, right? Where basically now, building into these stablecoin pools, pulling them up essentially, tranching them into juniors and seniors, minting new tokens when people enter. And essentially it's like a pass through, right? Because all the origination in terms of that rate of return comes from the underlying protocols. And what we're doing is just changing the nature of what's possible in terms of re-architecting the products so that you now have a derivative where, hey, I can now enter a fixed rate pool for up to a year. I can set up the duration for as long as I want. Or I can watch the rates go up and down and decide when I want to enter, right? So if you look at Compound on Aave and most of these money markets in crypto, they kind of follow these like leveraging and deleveraging cycles where as the market typically is going up and there's a demand for leverage, you'll see the rates on Compound and Aave begin to trickle up, right? And they follow a cycle. So, for example, if I was holding a position on Compound or Aave today, like it's going up and down, up and down, up and down. But if I do my modeling and I say to myself, wait, all of a sudden I can enter like a senior position on Smart Yield on a naturally like high rate. So let's say we're at the top of this leveraging. Actually, when we launched on Compound, when we first launched Smart Yield, you could have entered like a senior position. At some point, you could have entered like a $5 million senior position at like a 12% rate of return and locked that in for a year. And the expected return of that 12% is much higher than you would get on Compound over that same span as the rate kind of goes up and down, right? The expected return is probably around, this is just like, speculative, like more around like maybe 6 or 7%. So the idea becomes then that, after a few rounds of this, and a student investor is like, wait, I'm just kind of waiting for that leverage up to happen just to be able to lock in a position on the senior side because I can now get a fixed rate at a much higher rate of return that's insured and backed by the juniors, like who are willing to take more risk, right? And so that's kind of like the idea of how Smart Yield is. So over time, the vision for that was that you should be able to come onto Barmbridge and enter any combination of senior and junior positions across the risk curve in DeFi, right? So starting with the blue chips Compound on Aave, where we think is the largest markets, all the way down to like the highest risk protocols, right? So a cream is more high risk, high return than a Compound on Aave. So the idea now is that a user now can come in and say, look, I can kind of build a portfolio at any given point in time made up of different types of risk variable assets, right, that I can get fixed positions into or variable exposures into on the junior side. And essentially be able to now have not just exposure that you can essentially design, right, based on your own risk parameters, right? So that's kind of the start. But over the long term, the view is then you can actually hedge those positions actively over time. So like in traditional finance today, people that have large exposures to like equities or even fixed income portfolios, like a lot of those managers are not like buying and selling their positions, right, when the market is going like south, right? They're not going to like unwind a $10 billion portfolio. What you're going to do is hedge your risk if you think the market is going to tank, right? You'll buy options or you buy derivatives or other forms of financial insurance. And so the long-term view for like Smart Yield is not just building out this whole pipeline of exposures you get into, but a next phase would then to be, all right, once you've built out this marketplace that people can kind of get all the exposures to, you also now have to provide them ways to hedge that exposure directly on the platform, right? To make the user experience, a lot easier. Now, today they can do that themselves, right? By going into options protocols or like futures markets and doing all sorts of interesting things. But the long-term view is that having the ability to do that on a singular platform where you can see the whole industry, you can see the whole risk spectrum, and you can build a portfolio. Like, that's really the long-term vision for Smart Yield.
Akin, can you touch on like the fee structure, if there is any, for the Smart Yields and how that works?
Yeah, so the fee structure is when you enter a position on the junior side on Smart Yield, because they're ERC20s, and you can essentially just take them anywhere. You can literally just take the token and potentially over the long term, like trade them or transfer them. The juniors are charged, I think, 50 basis points in entering the pool, so 0.5%. And the seniors, it's a little bit of a different construct where the seniors, Barnbridge gets paid when the seniors unwind. So if I create a senior position today for 6 months, whatever the amount is, Barnbridge takes a percentage of the profits, right? So you get your principal back, and I believe we set it up where Barnbridge gets, I should know this better offhand, but it's either 10% or 5% of the profits against the seniors. So like the seniors almost act more like a Wi-Fi V2 pool where we get paid when you get paid, and the juniors, like, just based on the fact that they are RC20s and they're harder to kind of follow, because once someone mints that, they can take it anywhere. So we had to make the decision that the juniors get paid up front when they enter the pool.
Got it. That makes a lot of sense. Chase, did you have any more questions around the Smart Yield?
No, actually, I was just going to say this would be a good segue to talk about the other product. I'd be curious to learn about Smart Alpha. Did you have anything else you want to add? Or did anybody else have any questions on Smart Yield before we switch gears?
I didn't. I think this is a good segue to the Smart Yield, to the Smart Alpha product. Can you talk to us a little bit about how like the Smart Alpha bonds work?
Yeah, so Smart Alpha was sort of like, it was actually the original like product that we were thinking of launching first, and some decisions made to kind of launch Smart Yield first. But Smart Alpha is a little bit different in that you'll be able to essentially take leveraged exposures to an underlying asset, right? So Smart Alpha is a native primitive on Barnbridge. So it's not like something we're integrating onto like a third-party platform, but it's basically a way for people to enter pools with ERC20 assets, right? And essentially like create these leveraged exposures, right? Like, so I was saying before, where you can say, look, I want 50% exposure to Bitcoin or to Ethereum, or I want maybe 150% leverage exposure. You can basically program within a singular pool. You can have all these people entering different price exposures to a certain asset, and together, right, they sit in a singular pool that allows them to basically construct these exposures. And you basically dynamically, like, part of what you're trying to always do is have the pool kind of sit in a certain ratio of balance, right? So if you're going to get it perfectly balanced, right, then you would have to have everyone who's saying I want less than a one-to-one exposure, and everyone saying I want a like above one exposure, right? If they cancel out, then all you have is a singular price exposure, and all you've done is now you're divvying up the price exposure that the whole pool wants. So in order to ideally, right, you can run into situations where, let's say we're in a bull market and like degens are all like full throttle. I want like max exposure, leverage up. That poses a problem, right? Because that pool could blow up if it's too heavily skewed, right? So dynamically, like, we're now doing things like dynamic pricing, where if the pool is getting skewed towards like a certain side, you're making it more expensive for people to keep entering that leveraged end, because you're sort of like getting it out of balance, right? So for example, if I now want like 150% exposure and the pool's already leaning that way, it's going to cost me a lot more, right, to enter that. And at some point, it makes no sense, right, because the cost of now minting that position is just too prohibitive. Like, you're like, look, I'm going to basically spend too much entering that position for that exposure for what it's worth, right? So then maybe it seesaws back, right? So the idea is now to basically design a way for a shared pool of people to kind of manage or program their price exposure, but to kind of keep it within some sort of sensible bounds, right? And effectively, what you're really doing is, to some extent, it's not just a product where like people are able to now make those positions. It actually becomes, at steady state, it could be like a market sentiment gauge, right? Because if the market at steady state is now telling you, like en masse, that they think taking leverage or going long is the market sentiment, right? One way or the other, the market is telling you something. And if that is moving the other way, and people are taking more conservative positions, or saying I want less price exposure, or I'm exiting the Bitcoin pool and just going to stablecoin, like whatever it might be, like all those things are telling you something. So over the long term, right? So that's what Smart Alpha is. But Smart Alpha now creates the potential to create some sort of a sentiment gauge where you can even build derivatives against Smart Alpha, right? So if Smart Alpha on the market is going one way, right, there are probably market participants that just want to know what that is. And maybe that's data and information that they can run through, right, their algos or their models that might tell them something or have a signal. So part of what we think is that the product itself is interesting, but there could be other ways that market participants use that information to want to potentially construct other kinds of products. So you can see like a Smart Alpha and like almost like an inverse Smart Alpha. Like I want to take the other side of where the market is, for example. Like it's possible to build that kind of a product. So the view on that is that I think Smart Alpha is going to be a really, really interesting product, but the things we can learn from that and the potential derivatives that come from actually Smart Alpha itself could be really interesting as well when you marry that against other sources of data and what they're telling you. So ultimately, right, you think about the domain of where that sits. It's a lot of sophisticated investors. That's how they work today. And they're looking for information. They're looking for data, and they're looking for markets where they can execute right against the ideas or where they think the market is going. And so Smart Alpha will be a really interesting product to see how users might want to use it, but also what kind of feedback we get in terms of, well, if you could do this, can you do that, right? And so now beginning to engage with the marketplace on right conversations that might come out of that in terms of how they can inform product development going forward becomes really interesting too. So it becomes like a way to kind of convene, in my view, right, sophisticated users of all kinds around certain conversations on what other products we can develop beyond natively what Smart Alpha like does.
No, that's really, really cool. And from my understanding, the token setup is a little different, right? You have the junior token, the senior token, but also the mezzanine token. Can you talk a little bit about how all three of those tokens play into the Smart Alpha product?
No. I mean, so
secret.
No. And part of the reason for that is I think we were pretty locked in the current architecture of the Smart Alpha, but it could shift between now and when we actually launch. And I think we're sort of gotten into this point where, I think a lot has been disclosed around Smart Alpha, but I think we're becoming more reticent to kind of share too much before we actually, get products audited and put out specs right before launch. So
that makes sense.
But Smart Exposure is coming out before Smart Alpha. So so along the way in thinking about developing Smart Alpha, we happened upon a different product that we thought was interesting and should be launched. And so Smart Exposure is the next product. And so I could talk a little bit about that at a high level. But Smart Exposure is like simply just like it's sort of like being able to, it's kind of like set protocol in a way where you can take two assets or two ERC20s and you can create an exposure to both of them. right? So let's say, look, I want to hold Bitcoin and ETH, and I want to hold them 50-50. You can enter a 50-50 Bitcoin ETH pool. And what the pool does algorithmically is like it keeps you within, right, within some, I don't know, 2%, maybe 3% deviation. It keeps you at that 50-50 balance, right? So it's almost like a set it and forget it. And, I think this is not proprietary, but anyone can do an analysis. And if you look at historical data of Bitcoin and Ethereum, a 50-50, if you held Bitcoin and Ethereum at a 50-50 balance, for example, within a certain threshold of deviation, the expected return will be higher than, just holding one or the other, right? Because for some reason, like if the price appreciation of either asset deviates, like let's say like ETH outperforms Bitcoin for like a certain period of time, there's some mean reversion that tends to happen where at some point, Bitcoin flips and has like its own run and kind of catches up with ETH. And so we've done quite a bit of analysis that says having these smart exposure pools where you can enter a 50-50, 70-30, 80-20, that we think that's a product that certain users in the marketplace will want to access, because you can share them with the historical data that says that's actually like a better expected return and a better way to hold. But what smart exposure does is it basically does all that rebalancing for you. So you don't have to worry about keeping your portfolio in balance, because it could be, particularly with high gas prices today, it could be pretty not cost effective to be selling and buying to balance your exposure. But at steady state in a large pool, right? Imagine having like a BTC ETH pool that's $200 million. Rebalancing that, and even the thresholds to rebalance, like, we get lower over time. Over time, the need to rebalance will probably shrink, right? Because, one person entering in with like, 20K or 50K or 100K doesn't really move the needle enough, right? And so we think that there's a space for the market for that. Like, it could be an interesting product. It gives people a way to also structure their exposure, right? So there'll be different tranches, for lack of a better word, or different, set ratios. And you'll be able to run simple analysis to tell you, what's the best exposure you should have. And potentially, like, if you think about it, that's the kind of analysis we should just be readily providing. So the real value should be, look, we create the product, sophisticated guys can kind of, figure it out. But like, we can do the analysis ourselves and publish information on an ongoing basis that says, at any given point in time, this is the right ratio to hold. And here's the data that kind of tells you, right, historically that's been the case. And when that changes, right, you can have a change in sentiment. So perhaps it now becomes a way to actually inform the market that says, look, for people who want passive exposure, right, we have a much more cost-effective way to manage that balance. We can share intelligence that tells you at any given point in time what the right structure should be based on the favorite tokens you want access to, right? You can do also a correlation analysis that might tell you, well, you're better off not holding these two tokens, like hold these two instead, because these two are too highly correlated and you don't really get any benefit from it. Like, stuff like that, I think, is where this gets really interesting, where we can bridge the gap between TradFi and sophisticated users and the regular guy, right? And we can leverage the capital that TradFi is bringing in to bootstrap these products, or large holders are bringing in to bootstrap these products, make them profitable, and then level the playing field by then spending the capital to sort of share the level of analysis that brings it down to literally, here's the information you need, execute against that, right? And then extrapolating that a little bit further out, imagine now being able to automate that, where I don't even have to worry about, well, should I have a 50-50, 70-20, 80-20? Perhaps algorithmically, you can just do that in an automated way, right? That's possible, right? But I think the things that would have to be built to get there. But ultimately, that's the goal, right? The goal is to like give and empower, right, users, and give them the ability to sort of have the information they need to make the best decisions. And even if they don't necessarily know how to make those decisions independently, like just give them the tools to just make it a lot easier to do.
Based off of that, are you guys planning to do any type of like price forecasting and things like that with the data, or kind of predict ahead of time what type of breakdown someone should have in the future?
That's not currently on the roadmap. I think it's potentially a place we could end up, but like it's still early to the point where there's still a lot of like just initial product to launch, and we think that at least in the short term, like there are players in the market that do that already and can do that. So that's not really the short-term focus. The short-term focus is actually getting these products out there, making them successful, like building up TVL, right? Making them, reliable and do what they say and we think they will do through various market conditions. Like learn ourselves, like what we see, right? Because I mean, every product is a little bit of an experiment, right? It's kind of a theory. You think it will work. It might not work like you think. You might have to make adjustments. So a lot of it too is there's a lot for us to learn actually in how the products actually are going to be used, if and how they work, and then leverage that to just build and iterate on, improving those products or creating better products. And at some point, right, if you've been successful and you have this very, very broad marketplace with all sorts of products, people have the ability to hedge their positions, buy insurance, right? We've integrated with all the best in breed. Maybe then at that point, you're like, all right, maybe the next point is now, right, leveraging and creating analysis that is high value that you can sell, or, creating analysis that makes it easier for the, like, I don't know, millionth user to come in and just simply have, easy things to do. Like perhaps it's, rather than do that ourselves, is integrating with a third-party distribution platform. So imagine now saying, look, you have asset managers effectively on Enzyme. Like maybe it makes more sense for us just to integrate with them, right? Not just Bond, but all our products where now you have, quote unquote, like, experts, right, who are now constructing portfolios where perhaps a user now just goes to Enzyme and says, okay, I can scan all these portfolio managers, right? Some are doing fixed income, leveraging bond-bridge products, right? And, I look at the track record and I just put my capital into a pool there, right? That could be a path, right? So as the market evolves, like, I think it'll be more likely that some of those ideas will be more around like partnerships where third parties leveraging that information and then going to build something else, or a third party we're partnered with to sort of, leverage each other to kind of create an access point. So now perhaps it's now like it makes more sense to integrate with a third party who now sits on top of BondBridge and then provides all those value-added services. So like we don't have to worry about that. They charge for the value add they're providing, but that capital trickles down into BondBridge essentially, and we're getting a cut and we're getting paid. Just like Aave basically, or Compound today, any TVL that's created on BondBridge that trickles down to their platforms, like they're getting their fee because they're originating that exposure. So I think it'll be some combination of that, but I think as of today, like there's just a lot of space to keep iterating on product first, and that's probably something else we'll figure out down the line.
Yeah, this is extremely interesting. Somebody who doesn't necessarily come out of the finance industry, I think this is like one of the more kind of like complex DeFi products that I've seen. Like the risk protocol derivatives and just having the bonds and having the layers within the bonds of like risk pools. It's extremely interesting, but I do want to kind of switch gears here. Since you are taking over the DAO, I think you're the perfect person to have on to talk about this. Could you kind of talk about the DAO at a high level and like how does that work?
Yeah, so I'm not taking over the DAO. I am going to spend more of my time on the DAO and building the structure there. So going back, like the very first product BondBridge launched was the DAO, right? So it was yield farming. And the very first smart contract that was built, well, not the first smart contract, but the first what we call a product. The team also built the yield farming contracts that we use. But governance was first, right? And, we always say within BondBridge, it's, a governance first protocol. And, Bridge governance, in terms of how it works, a lot of what we try to do was, first of all, like it's built on a diamond standard, which allows you to basically change contracts over time. So you can essentially upgrade these contracts without people having to like on protocols where a new version comes out, you got to pull all your capital out and put into a new version because of a new contract. Like on Bridge, like within governance, you wouldn't need to do that because it's built on what's called the diamond standard. So you can actually change certain features or dynamics or variables within an already established contract, right? So, and that design was deliberate because we wanted a way for a process where the DAO could basically essentially control every aspect of the protocol, like remotely and in the best way, right? So you could, as the procedures, for example, you have to stake bond tokens in the DAO to be able to put in proposals, to be able to vote, right? The voting system and the way it was designed, for example, most on-chain DAO votes take at least 12 days. And the reason for that is there's like a 3-day warm-up so that, once a proposal is put in, it's 3 days that allows people who might not be staked to stake their tokens. After that, there's a 4-day voting period that's triggered. Right? After the 4-day voting period, there's another, I believe, a 3-day cooldown, which is essentially it's what we kind of put in place of a guardian. So we had this debate about, there's some protocols that have what you call a guardian, where a proposal can go through, but some entity or group of people essentially have a veto power. So if it turns out that, okay, we think that proposal is bad for whatever reason, or it's nefarious, or, right, maybe some entity gamed the system and this is not a good idea. Some protocols have guardians where maybe a core team or a multi-sig has unilateral power to basically reverse that vote. And what we did instead in Bridge is we put in another 3-day delay before execution, which essentially gives the DAO the ability to put in a counter proposal with a slightly higher threshold to cancel the previous proposal, right? And that was a design choice we made because, the view was that, no third party or group of people should be able to veto the will of the DAO. Like only the DAO can kind of change its mind. And so that's built into the design for how proposals go through, right? And then, so I think altogether it's like a 12-day period. So, I mean, it's longish in a way, but it was deliberately done to say that, DAO first or empowering the DAO was really sort of the long-term view that everything will evolve into the DAO controlling every aspect of the protocol and having all the tools to do that, right? So, so to some extent, right, yield farming, when we launched yield farming, we had to do that in such a way where there was enough distribution that was wide enough to then create, the wallets that could then enter the DAO, basically trigger it. So the launching the DAO was done by a vote. The very first, the whole process for actually launching the DAO technically was launched and triggered by the DAO itself, not the core team. Right? And that was also deliberately done to some extent to say, look, no singular entity or individual actually launched this protocol. It was done by the will of this decentralized network. Right? So there are a number of all these design choices that went into that. Now, we still sort of, to a large extent, the core team is still the nexus of where most of the development in Bridge happens, right? Because DAOs take time to build out, right? And we spent some time trying to now start building out, we launched an integration team, for example, that is basically funded by the DAO, will be funded through a multi-sig, have some ability or some, the idea was to create a structure where these teams could be stood up and they have some ability to be semi-autonomous, where the DAO can basically fund the activities, but they have a lot of autonomy within a range of requirements to do what they're supposed to do without having to be micromanaged, right? But with enough supervision or reporting such that the DAO still knows what's going on and can kind of say, okay, this team is doing what it's doing. We can see the outputs, right? The execution, it's great. Or we can recall that team saying they're not doing anything, right? But it's you have to figure out what's the compromise between oversight, autonomy, efficiency, like all these things. And so to a large extent, we're still experimenting around these things, right? And so there's still this idea that having the core team have some ability to fund itself through its own multi-sig and have a runway is important because it'll take time to build these structures within the DAO. But so for me, in my, what I've kind of, I guess, a self-term role, I think that there's a lot of scope to accelerate the development within the DAO, right, and empowering the DAO because, part of the challenge is it's one thing to have the mechanisms and the power potentially for the DAO to be operational and kind of take the reins, but it's a whole other thing for that to happen. And so you need leadership too on the DAO side, on the community side, to say, well, these are things we can be doing now. Like, these are things we should be sort of like pushing forward because as human beings, naturally, like, even with the best intentions, most people don't willingly devolve power, right? If I have control and I'm doing something, it doesn't occur to me when I wake up tomorrow that I want to give power away unilaterally, right? So my mind isn't thinking about, well, we could do this today and kind of give away power next week. I could do this now. You might need the other side to say, well, now is the time to start pushing on certain things that might not be occurring to the team. So empowering and creating a structure within the DAO to now start effecting, right, and practicalizing those things, right, it almost becomes bootstrapping that. So you need people putting out proposals that says we should do this, we should do that. You need people like incentivized to drive this within the community, and potentially like it becomes like a way to set examples where you have someone on people who are incentivized or who are stoking these ideas, and it creates this flywheel where other people now say, well, I could do that too. I could do that too, right? It creates this sort of, in my view, like what's the word? You have to also like deliberately do that and have people in the community that are either driven or incentivized to do that, or many things wouldn't naturally happen unless the core team now says, hey, I want to do this today. And I don't think that's how we get to the long-term vision of the protocol without having, that sort of impetus on the DAO side, kind of saying, okay, now's the time. And people organizing, right, the DAO directionally into that future.
100%. Akin, I think it would also be interesting for the audience to learn about the bond token versus the V-bond token, and kind of understand how those play into the protocol.
Oh yeah, so the bond token is, it's a bond-rich governance token, right? The 10 million bond tokens will ever be in existence. Most of the bond tokens, or the largest pool of bond tokens, still sit in the treasury. So I think it's like 36%, something between 34 and 36% today. So that's still the largest mass of tokens. Some tokens sit in the multi-sig for the core team, and then everything else is, distributed in people's accounts, wherever they might be, spread around the place. So when you have to participate in the Bondbridge DAO, the first thing you have to do is acquire bond tokens, and then you have to stake them into the DAO. Now, we incentivized the DAO by creating DAO rewards, where when you stake your bond tokens today, you're earning more bond. So it's essentially like an incentive system to encourage people to enter the DAO in the first place because, well, I can earn more bond and increase my stack. And now that I'm in the DAO, well, I have the bond to now participate, right? So I can participate in votes, I can put up proposals, a whole mechanisms for that. When you enter the DAO, what the DAO does is creates V-bond. So when you stake your bond into the DAO, you get V-bond, which is voting bond tokens, right? So if I had 10,000 bond tokens and I just stake them in, I can get V-bond. But there's a secondary mechanism in the DAO where you can lock your tokens for, varying lengths of time. So if I lock my 10,000 bond tokens today for a year, and it's a decision you have to think about seriously, because once you lock your bond tokens for a year, the contract is not going to release those bonds for a year, and nothing can be done. Like, there's no mechanism to unfurl your bond or give you your bond before that clock is over. So you can lock it in for 2 months, 3 months, however long you want, up to a year. Now, all that does is it gives you a multiplier of V bond, where if you locked that 10,000 V bond for a year, you get a 2x multiplier. So your voting power is basically doubled. So you now have 20,000 V bond, which gives you like double the voting power relative to someone who didn't lock in. And so all that does is it basically says people who are willing to lock their bond token for a period of time are a lot more aligned, right? If I lock my bond tokens for a year, then I'm really aligned with all the decisions this DAO makes over that long period of a year. Because if they're bad decisions and it affects the bond token, I suffer and there's nothing I can do. If they're great decisions, then great for me. So it kind of is an incentive system in a way to incentivize people who want more agency and more power to influence votes, to say you can get that, but it means you're locking your tokens and you're also thereby living with the decisions you make for like at least a defined period of time. So that lock-in multiplier kind of like, goes up to basically 2x, right, for a year. And then, if it's 6 months, it's 0.5. It's it kind of deteriorates. And over time, like as the clock starts running down, like your multiplier like deteriorates. So it goes from like a 2x. If you're locked for 12 months, by month 8, it's like 1.75. Like it kind of decays over time. But you can always go back in, add more bond, and start the clock again if you wanted to. So you can extend it every time you add more bond into the lock potentially.
You had kind of touched on the proposal process a little bit. Is there kind of like a certain threshold of bond tokens that you need?
Yeah, you need one. Yeah, so you need 1% of the voting power that's staked in the DAO to put in a proposal. So you basically need 1% of you need 1% of the bond actually in the DAO, not the V bond. The voting power is basically slightly separate. So to get a proposal in, you need to have at least 1% of bond to do that. Part of the reason for that was clearly not to have just spam proposals where the threshold is anyone can propose anything. But the other idea behind that too is that you don't have to have 1% of the bond token. So there's a delegating system where anyone can delegate their V bond to you, right? So let's say, for example, I have very little bond, but I have this really great idea. And I, talk to a few people in the DAO. People are like, yeah, that makes a lot of sense. 10 people can get together, like delegate all their bond to one party, aggregate enough bond to put in a proposal. Or say a whale in the community that you think or know has 1% of the bond token. Well, convince them of this idea and they can put in a proposal on your behalf, right? You can talk to the core team and say, I have this really great idea. You go through the process. Maybe someone on the core team of the multi-sig itself enacts a proposal on your behalf. So, I think that was just put in there so there's at least some sort of threshold. So it's not just, at least it's material things that kind of come up to that. But there's a process whereby even if you don't hold 1%, like you can get that. And I think that threshold is relatively low at this point where any proposal these days that have real merit that kind of come to the community, we kind of created there's kind of like a little step before actually things go to on-chain votes. We also have a snapshot system where we use it as like an indication. So we typically would, if there's an idea, for example, you'll probably like post it in the Boundbridge forum first. Look, we should do X, Y, Z. There's a debate around it. Maybe some of the parameters of the idea kind of shift. So I'll give you an example. Like, so, we got whitelisted on Bancor and I pushed for, the Treasury seeding that Bancor pool, right? We had some internal discussions and we decided to seed, the single side of the Bancor pool with 25,000 bond tokens, which is what, at the time was like $1 million. It's less today after like the bloodbath last couple of weeks. But so, and we put it to the community, like went back and forth, and like we got a lot of feedback from the community that said, well, that bond is sitting in the Treasury, like why 25K? Why not 50? And literally the community was like, put more. And so after that process and investigation went through, and the actual proposal, which is now going through, well, actually, I think it's just passed our voting. So we have a couple of proposals going through voting currently that I think have met quorum. And one of the line items of that proposal was to fund the banker pool, and we changed the parameters to 50,000 because there was a huge amount of people that said put 50,000 bond instead of 25 because it's single-sided, right? There's no IL loss. If we get rewards on that, then that's just cash flow returning to the DAO, and we're also liquefying another pool that creates more liquidity in bond tokens, right? So it's kind of like a no-brainer for the community. And so that's an example of kind of the process, right? It's like part of the idea is everything lands in the community first. We can kind of iterate around it, right? There's some indication of yay, nay. Most of the time through discussion, you get to consensus, and we haven't really had a contentious vote, in my view, on the snapshot yet. So the idea is by the time these votes actually come into the on-chain vote, you kind of already know what the sentiment is. There's already general agreement around it. So the likelihood is that every line item is already pretty much been pre-approved, and the on-chain vote is a little more of a formality at that point.
Got it. That's really, really cool. Chase, did you have any other questions around that particular topic?
No, that was extremely thorough. I appreciate you walking us through that. It's just such a fascinating industry, and just to have a community vote come together, and they're just no, add more. It's single side liquidity. You're not going to lose any money, and it's just a money printer for the community fund. It's just it's such a fascinating concept, and just time we live in right now.
Yeah, and the other thing, so the one thing I'll add to that too, I think it's a non-trivial view because I think it's something we'll see begin to evolve in the space, is when we were pushing to whitelist on Bancor, it was a pretty interesting process because we realized relatively quickly, to some extent, when we put it to whitelist, I think there were a handful of other products that are also trying to whitelist. And every project other than Barnbridge that passed and met quorum was voted on by a couple of whale wallets that were owned by a VC fund I will not name in the space. And we realized relatively quickly that they were not going to vote on our proposal because our proposal was actually well above the threshold for passing in terms of the percentage, but we hadn't met quorum because there were just not enough votes. So they basically were abstaining. If they voted no for us, would have passed because it would have met quorum and met the threshold. But we realized at some point that, okay, they weren't going to vote on our proposal. They're abstaining, which is basically trying to block it. And so, we went on this, kind of door-to-door campaign is the best way I would kind of say it, to basically appeal to the Bancor community with a lot of help from the Bancor team. They were very, very helpful. They kind of showed us into hidden rooms in this space and all sorts of stakeholders. It was pretty interesting, I'd say 48 hours for me. But, I don't think I've said this publicly yet, but I would say that I think probably the single sole reason we got passed was because of the Chainlink community, right? Because we appealed to a lot of Chainlink holders who are some of the largest LPs in Bancor. And, I've been part of Chainlink or the Chainlink community pre-mainnet. So I actually knew a lot of people. I know Chainlink God fairly well, right? And so having that sort of, reputation within the community was helpful because all of a sudden it's you walk into a room and it's oh yeah, I know you. We talked about X, Y, Z, right? And so it becomes this sort of qualifying process of, all right, you guys are good. Yeah, when I get home, I'm going to vote for your proposal. And we met quorum. Quorum on Bancor was 40%. And, we ended up getting 40.23%. We barely crossed the line, literally at the last minute. And so I say that to say that part of the learning was that, if we at Barnbridge see a protocol like Bancor as a long-term partner, potentially, then it behooves us to acquire voting power on Bancor, because we need to have the ability to, one, align ourselves with the community financially, which is a strong signal, but also have the power to actually vote in our favor on the proposals we want to pass through, right? And not have that ever repeat itself. And if you extrapolate that out to potentially other protocols, then there's going to be a future in DeFi, in my view, where it'll behoove products to be financially aligned with the protocols, particularly like protocols that have decentralized governance that's accessible, right? Aligned so that they have agency within those protocols, so that they're prioritized within their protocols. If I go to Bancor and say, look, we have a couple $1 million in a Bancor pool that we're seeding as a DAO, like that's our capital we're lodging there that we can pull out if, right? It's like, look, we're helping the network, so help us on the other side. To me, that's a fairly strong argument and way to appeal to the community to kind of vote on you on certain things. And so if you extrapolate that out down the road, right, and you're thinking about particularly like protocols like Bridge, where we think there's going to be a lot of partnership required to make us successful, and it will behoove us to actually spread our capital, right, in protocols where we can actually have governance power as well and affect the decisions that we want that are in our best interest. So this now becomes a salvo into politics, right? And it becomes, everything is politics at the end of the day. So that now becomes a new dimension that now we actively have to think about when you're not just deploying capital into Bancor to fund a single-sided pool, and that's all great, to create liquidity for bond tokens. That's great too. Like, I want governance power on Bancor because we had an experience where literally, right, potentially a strategic relationship was either going to be stalled, slowed down, or not happen because a third party, for whatever reason, doesn't like us or whatever it might be. So things like that, I think, are beginning to emerge and becoming like, I think there've always been dimensions of what's been at play, but I think they'll become more and more emergent and visible as time goes on.
Absolutely. Life is a game of chess, if you will. There's always moves being made. So, kind of like going off that, like, what are the chess moves in the future for Bridge? Like, what is the kind of like next 3 to 5 years look like for you guys?
Yeah, this is my own personal opinion. I think that, and it's basically what I said to a large extent, what I've been trying to say for the last half hour. I think it's really about creating great products that you think there's a market for. It's about bridging DeFi and traditional finance, right? Both from, in terms of getting more traditional capital into DeFi, but also creating a space where, you're not compromising the ethos of everyone gets to participate, right? So the little guy in DeFi has just as much opportunity to intelligently enter and manage their financial assets as a sophisticated Wall Street entity, right? And doing that in a deliberate way is important, right? So, right, building the tools that helps the little guy understand how to use your protocol and not just building something that's good for the traditional finance guys, I think philosophically is important, because you want to basically, in my view, you want to kind of leverage the power of the TradFi guys to make the markets more even. That's the way I kind of see it. Like, sell a proposition to TradFi guys, make profits off of them, use those profits to like level the playing field, right? So that's kind of, I think if we're successful, we need to be successful doing that. I think as well, it's also partnerships, right? It's, partnering and making decisions in terms of who you partner, who you partner with, and who you prioritize. I firmly believe you should look at some of the leading protocols in DeFi today that have made inroads into traditional finance. Like, you don't have to dig deep to see who they are. And the question you need to ask yourself is, okay, what's the appeal of traditional finance to them? What are the things they're doing that are attracting that capital? And what can you learn from them? And should you be spending more of your time and resources finding ways to, partner with them, engage with them, build new things with them, leverage their intelligence in the dev team, leverage the moats they have? I think I think there'll be need to be selective, right? And I think I don't know. I kind of see like there are almost two worlds that are emerging in DeFi where there's a philosophy where you just build things and partner with whoever you can, which I don't think is prudent. And to me, it makes it look like some protocols don't have a strategic direction. Like everyone can be your partner. Everyone is not necessarily the right partner. So if you're doing business with everyone and like integrating everything, it's like kind of okay, what's the strategic direction? I think on the other side, you see some more deliberate protocols that are being, I don't know, maybe more discerning or very, very particular. And I think that's kind of where, in my view, the spectrum Barn Bridge should sit, where it's like you have a vision, you know what that vision is, then you try to align with other people that have that vision and prioritize them. And some partners don't make sense for lots of reasons. Ultimately, to me, it goes back to who are your customers and users and what do they want. And if a customer, if you're on customer calls and they kind of say, well, these are the kinds of protocols we are in today, these are the kind of things we want to see, these are the kind of assets we'll never touch. Well, I'm not going to build and integrate an asset that large sorts of my customers are saying they don't want to touch for all sorts of risk reasons, right? I'm going to go with the guys that they say, yeah, those guys are good. Look like them and we'll come use you. So, I mean, I think, from at least from that position, I think that's what the next 3 to 5 years should be. I think ultimately, too, at some point it goes from, building our own suite of products and our own vision and then aligning with others, right? So like I said, to some extent earlier on, I think we'll need to figure out things like hedging products, other financial products that allow users on BarnBridge to better manage their exposures. And I don't think we're going to build everything, right? I think some of it comes with making smart integrations. You have to think about insurance if it's something users want, and then watch that space and kind of figure out what kind of insurance products you provide on the product side, which is be more like structured hedging products, and then on the smart contract risk side, potentially, smart contract insurance could be an area we'll look at. But yeah, so that's kind of how I see it for now. And then I think the other leg, and something we didn't speak too much about, is what we kind of spoke to, but not in this level of detail, is that, just like TradFi has on-ramps or retail has on-ramps, and there's a period in crypto when we talked about on-ramps and like, oh, there are not enough on-ramps for like retail to come in. Like that's the exact same thing we're seeing in traditional finance today. Like the money is ready, but all the on-ramps aren't built, right? And as these on-ramps start getting built into TradFi, like whoever can kind of sell a compelling story to these on-ramps as to why you should have BarnBridge integrated on your interface and platform relative to everyone else, whoever can kind of set a beachhead there has a massive advantage, right? Because you become a brand that is just on the platform these guys use. And, they'll use what they see because they're expecting these on-ramps and platforms to have some level of curation in some avenues, right? So, like, today you have platforms like Fireblocks or Copper where it provides some level of protection, right, for like, I'd say venture fund types, high net worths, like smaller asset managers, right? You can lodge your capital there, right? Fireblocks has a fork of MetaMask, right? They have multi-party computation that kind of secures their network and has all these security layers that TradFi guys like to see, but then they can go play in DeFi the way they want. That's just giving people access to a platform that's more secure. But then there are on-ramps coming that are now more thinking about not just the platform, but the curation. So if you're a registered investment advisor, for example, actually OnRamp is a company that just launched today, and they're building a platform that is basically a platform as a service for RIAs to be able to access crypto. So now every RIA in the United States and Europe, right, potentially can now integrate into a platform and then offer their people or their LPs, Bitcoin, Ethereum, and whatever assets that this platform provides. But you can imagine that, it's built by RIAs. So what they're also kind of providing to you is like an advisory layer. So it's not just, well, here's product and I'm a degen fund. I don't need your advice. I'm the advice. Just give me access. That's Fireblocks. But like on-ramp is, well, here's the platform, but there are a lot of things you need to know. And this is why you should, right, have access to this token or not. Here are the risks. Here are all these things that RIAs need to know so they can now tell their users and their LPs, so the LPs now have at least some sense of, all right, here's my risk profile, and so here's directionally where I want my capital to be, and here's now where I don't want it to be, right? So as these platforms like that, for example, start getting built out, it now becomes important to say, well, what's the fixed income protocol that sits on on-ramps, right? Is it going to be Bondbridge? Is it going to be whomever else, right? So that's the other part of the vision I think becomes really important, where you now want to spend time today courting those platforms that you might not even be on for another year, but you're building that relationship. You're trying to understand the market. You're trying to understand what the apprehensions are. You're trying to spend resources educating them, potentially supporting education on their platforms so they can distribute that insight to their users. And that level of insight and education and understanding gets associated with your brand. So when the users are ready to use the platform, oh, I already know Bondbridge. I already know what they do. I know their products. We've spoken to other guys, like they're familiar. Right? And in traditional finance, that oftentimes takes a lot of time. And the sales cycle is long because it takes time for people to build trust, right? Whether people like it or not. And I think that's one thing that, from what I've seen, within DeFi, there's a lot of impatience. It's kind of like, I want it today, I want it today. And people don't often realize that, well, the sum total of capital that exists in the world still sits in TradFi. If you want that money, you sort of have to play by how they're comfortable. And so that's the other side that I think becomes really, really important over the next 3 to 5 years. As these RMs get built, as they get more sophisticated, like what choices are they going to make and who do they want to integrate? And whoever is successful at articulating and working that space, right, has the opportunity to become the runaway DeFi protocols of the future, because that's what those users are going to subscribe to.
No, 100%. I really liked your points on like just aligning with companies that also have like the same vision as you do. I think that that's extremely important for like the overall ecosystem and the health. And I also really appreciated your touch point earlier on Chainlink. I thought that was interesting. How they were kind of acting as like the bridge, right, to kind of unite different parties together. And they're currently doing that now, right, from like a protocol level. But it's really cool to hear that they're also doing that, in person or virtually, connecting teams and groups and helping move that vision forward.
Yeah, for sure. The power of Link Marines cannot be understated.
You got a lot of them.
you got a lot of Link Marines here in the chat. They're like head nodding, like, yeah.
Let's go. If anyone in the audience has questions for Akin, you can just request. We do have a little bit of time, so if anyone does have questions that you want to ask Akin directly, feel free to request.
Yeah, while we're waiting for that, I can add a question, a like theoretical kind of conceptual perspective of what this may look like in the future. So, like, say I had a retirement account, or let's say like I have an investment account, or like a retirement account, whatever it may be, through like Fidelity or some other larger institution. Will it kind of be potentially in the future to where it's like there will be an API through my login credential with that service? I will be able to interact or like place funds into Bondbridge protocol like through their API. Like that would be directly connected to you guys.
Yes. So I mean that's the way. So I mean that's the way it already is today. Not with Bondbridge. We're still early, but if you look at, Stani has said this a few times. Stani has said, over 70% of all the TVL on Aave interacts with Aave at the smart contract level, not through the front end. And so if someone is paying that smart contract directly, right, it's not some degen that's built their own stack, right? It's more likely a fund, a trading firm, some sort of sophisticated entity that says, I don't even want front-end risk. All I want is a smart contract. I want to build and integrate against it, and I want to call that contract to launch my capital. And I want to do that potentially in some sort of form of anonymity, right, where no one even knows that I'm operating on the contract because I've figured out some way to kind of obfuscate my identity, right? 70% of Aave is coming through the smart contracts, which basically tells me it's mostly, some sort of TradFi, right? And so whoever the TradFi entities are offering access, right, to Aave yields through whatever their proprietary system is today. And that's going to remain the case and might even grow over time. So if that's the mode of operation today, then the simple answer is if BondBridge is going to be successful attracting that user, one way or the other, that's the way we're going to access them. Either them basically doing the same with us and integrating directly with us, or perhaps, we are finding deeper ways to partner with Aave or Compound or these guys and saying, well, you guys have those relationships, like perhaps we can offer that access through you, right? So those are questions outstanding. But I think the short answer is, I think the future is going to be, I don't think you're going to have a mass migration of people from the current platforms they use. I think those platforms are going to build integrations to service their customers so they don't lose that customer. And you have to understand, like, the core thing that binds, like I said, a customer to a platform is years of trust and relationship. And in many ways, too, like, it's more complex than, so, like, I was telling someone today, like, the average person can just say, like, I'm going to go on Coinbase, move money from my bank account and go buy crypto. Like, whatever. I don't really care about my bank that much. Like, high net worth individuals, financial institutions, the nature of the relationships those people have are more complicated. Because, for example, a company, that has treasury management with a bank or some third-party institution, right? That relationship is probably not just managing treasury for them, but it's giving them overdrafts and short-term lending, right? They are investment bankers that are going to raise capital for you when you want to, right, issue more shares, right? It's a whole stack of relationships that's not just about crypto. It's like, am I going to leave that deep relationship to offboard some capital, right, to go to some third party to get crypto? No, I'm going to knock on the door of my relationship and say, you guys better integrate crypto relatively quickly because we want exposure. And we're willing to give you some time and wait. And if enough of those customers are knocking down the door, then you're sure those guys are going to be like, we don't want to lose our customers, we're going to do that. So that's the way I kind of see it more happening, where all these traditional entities will now figure out ways to basically provide access, right? Some of the scrappy, smaller players, hedge fund types, they'll build their integrations, right? You'll have players that build new platforms that are like regulated platforms that do all the like legwork and then provide like this platform and interface to the user. So if it's like on-ramps, like I mentioned before, it's like, well, we're RIAs, we're going to give you a platform you're familiar with. So we're going to build out everything you need, the bells and whistles, create account, create sub-accounts for all your users, right? Create portfolio allocation. Here's analysis tools. Like, that's what RIAs are used to having today. Like, so you're going to have to build that for them. And they're like, oh, okay, this is cool. This is just like how we manage real estate, how we manage stock exposure. Like, now it's crypto, and now I have all the tools, decision-making tools to do that, right? So someone is going to build that and plug it in. And the guy who services, the guy who's had his $20 million fortune with the same investment advisor for 15 years, he's not going to leave. He's just going to be like, hooray, now I have crypto. Great, where'd I put it? What part of my portfolio should I put the crypto? Because remember, he's still relying on his RIA for advice. Do I put 5%, 10%, 15%? Do I buy Bitcoin or ETH? Like I don't know. Like, tell me what to do. So those relationships are very sticky, and I think they'll remain that way for the vast majority of people. Right? There'll be some attrition at the margin, but like the base core of that capital that currently sits in the financial system is not just going to leave. It's just going to like evolve.
Awesome. So we have a guest on. You want to go ahead and ask Crypto?
Yeah. Name's Maverick. First time talking. I've been listening to Base probably 10, 12 times now. I'm super thrilled with what you guys talk about, and educational. And I want to say, Akin, Bond is my number 2 position behind Bitcoin, and in fact, ahead of Link now. After I aped in more yesterday, so that I could vote on the Bancor proposal and help it reach quorum. Big Bancor fan, and that's where all my Link is staked, and Maker and Aave. So just left the stock market a year ago, pulled it all out after GameStop, and just couldn't be more thrilled with crypto, and I love listening to Base, and Barnbridge and Bond are definitely a big part of my portfolio. I just want to let you know I aped in for that quorum. So thanks for all you guys do, and I'll turn off my mic.
Yeah, thanks, man. Thanks for crossing that. I think we crossed quorum today. So on those votes, we have a 40% quorum on Barnbridge votes. In terms of, so it's 40% of those staked into the DAO. So it's not. I don't think it's ridiculously high threshold, but it's material. So thanks for the vote. Every vote sort of helps.
Thank you for that, Maverick.
Yeah, thank you for that, Bitcoin Prophet. We appreciate you coming on and being an active listener of the Base Space. It's awesome, man. Yeah, honestly, you answered all of the questions that I personally have. Super High, Chase, Connor, are there any outstanding questions while Akin's still here?
I think he kind of covered it all. It was very thorough, like Chase said earlier. Yeah. It's super exciting to see, like you said, you came from growing up in Africa, and now you're building the next financial system. Like that's really inspiring.
Yeah, kind of just second that, kind of more or less just speechless and absorbing all of it. Just trying to get as much in as I can. No real questions from me tonight.
Hell yeah. Akin, we do record these sessions. Are you okay with us posting this on our YouTube?
Yeah, no problem.
Hell yeah. Well, I think I'm going to close it out here, guys. Really, really appreciate Akin, just taking the time out and coming on the Base Space, supporting the group. Super High, Chase, Connor, thanks for everything that you guys do behind the scenes, and just wanted to thank all the listeners for tuning in and really representing the Base Space and continually coming on. Akin, it was a really big pleasure. I'm sure we'll be in touch, and of course, definitely want to stay up to date with everything you're doing. And I could definitely see you coming back on in the future. Would love to hear more from you, and I think you have a lot of good insight on the industry. You have a really, really strong vision of where you see everything going. And of course, I think everyone else agrees, like, your backstory is really inspirational, and you have a really different perspective from, myself in the U.S. And really, really appreciate just you breaking that down for us and talking about your entire backstory and how you got into crypto.
Yeah, I just want to echo that and first say, I really do appreciate you taking the time. I know it's kind of late, taking time to speak with us. This conversation was incredibly insightful, kind of inspiring as well to hear your story. I definitely look forward to following your journey in this industry as well as Barnbridge. So I really do appreciate it. Thanks for being extremely based.
Yeah, +1. Thank you, guys.
Thanks for having me, guys. This was fun.
Hell yeah. We'll close it out. Thanks, everyone. See you guys tomorrow. Peace.
Good night.
Thanks.
Good night, guys.
Good night.